Hey, good morning. Started a minute early. How's it going? Hey, Valerie. Whew, man. Looks like holiday weekend in the market already. Just kind of floating along, not really doing a whole lot. Morning, Kimberly. Morning, everybody. If you're new here, make sure that you hit the subscribe button because you have to be a subscriber to be able to chat. Then while you're at it, you might as well hit the little doodads so that you get notified every time I go live, which tomorrow, going live again for a special crypto market update, even though the market is closed. The stock market, the US main stock markets, the crypto market never sleeps, always open. Never, there's nothing that stops it. I mean, there's no pause. It's open every day. Holidays, 24/7. It's a beautiful market. And we're going to talk about it tomorrow during a special morning monster. Today, I got my green monster. And I'm going to do a little pass through here. Hey, Terry, back again. Hey, Jason. Morning, everybody. Morning. So, anyway, let's go ahead and throw the disclaimer up here. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may be full of crap. This presentation, intended to be informational, educational, and fun, is not a recommendation to buy or sell anything, financial instrument or otherwise. And if you desire personal financial advice, you got to hire and consult a financial advisor that has your best interest in mind. I'm just giving out general information and some of my own opinions. So, like I said, I may be full of crap. It's up to you to make your own decisions. All right. We have, let's see. There we go. S&P 500. And failed to break out. Got a little pullback yesterday. That's the breaks. Now, what I, came to talk about, check this out. So, OPEC's oil put was just the start. Why the credit crunch is going to throttle U.S. crude supply even more. Now, this is not like an immediate situation. This is like a big picture, bigger, bigger time horizon. So, U.S. oil production highly concentrated as the top 5% of U.S. metropolitan statistical areas produce 80% of the sector's output. And we're looking at Midland, Texas, one of the highest outputs. Houston, right up there too. Oklahoma, Greeley, I don't know how you say that. Greeley, Colorado, Dallas, Tulsa, Bakersfield, California, Shreveport, San Antonio, and down to Pittsburgh, Pennsylvania. You don't think of Pittsburgh as an oil producer, but right there. Anyway, so what does this all have to do with anything, right? Well, the banking crisis is creating a situation where banks are not going to lend. The tighter lending requirements and higher interest rates. We all understand that. The problem here, the regional banks, the ones that are getting hit hard with deposit withdrawals, are the ones that lend on projects such as oil and gas exploration, mining exploration, and get all the syllables out. This is going to lead to less CapEx expenditure because the lending environment is tight. So, like I was talking about, the 73.3 million acres of Gulf of Mexico going up for lease for drilling, that requires CapEx spending years in advance of the production coming online. What we're going to see is reduced investment in CapEx for drilling oil and gas, which is going to lead to reduced domestic production of oil and gas down the road because we didn't add more wells to take over the wells that are going dry. And this is going to lead to higher oil prices. Now, it's not higher oil prices this year necessarily, but the stock market is forward looking. And eventually we're going to see much higher oil prices. My projections showing upwards of $150 to $200 a barrel of oil on the next run. And this run could last another 7 years or so, potentially, possibly longer. So we're going to see much higher oil. It could go as high as maybe $300 in a barrel of oil. So right now, despite the green agenda and we're not going to use oil anymore, that's a farce. Just think of it. There's no way that we can replace all of the machinery, all the everything that runs on diesel, jet fuel, Jet A, military JP8, and all the things. I mean, the trucks. There's so much distillates that we use. Even if we were to replace all the gasoline cars, which, funny enough, producing oil was not profitable until the gasoline engine came around. They were just throwing away the gasoline as they distilled out for heating oil and diesel. And actually producing oil didn't become profitable for the Rockefellers until the gasoline engine came on the scene and became popular, and then they could sell all that waste product. They were just dumping it in the rivers. If you don't believe me, go hit Wikipedia and look that up. So if we quit using gasoline, does that mean that oil becomes not so profitable? Hard to say. Anyway, so this is a macro view of the oil situation and the fallout from the banks. So it's a big, like I said, it's a big time horizon thing. And stay tuned, keep coming back. I'll keep you updated on this. But this is just another piece of the whole big story that's going to lead to more pain. And old Jamie Dimon quoted in CNBC last night saying that the banking crisis is far from over, and this is going to last for years. And this is just another piece that's going to last for years right here as supply, domestic supply, dwindles because we don't make CapEx now. So anyway, yeah, hey Keenan, Patrick, Pat, George, Salvo, glad to see everybody. Let's jump into some charts, talk about what's actually moving today. Not a whole lot, and it's kind of a flat market this morning. Let's load this back up, pop over to the market movers, and so yesterday just kind of sitting right in the middle yesterday. Didn't really move a whole lot yesterday. Tuesday was the big down. Yesterday just kind of consolidating on the stocks above the 50-day moving average for the S&P 500. ES overnight, just a little baby move, not really, just kind of consolidating down here. It was higher than the low yesterday, just a little bit of red, a little bit of drift off. Not much happening. And looking at the calendar, let's see, is that this week or next week? That was next week. Go back. This week's calendar, can't remember what day it is. It's all a blur. So this week we had unemployment claims coming in at 8:30. And then tomorrow, while the market's closed, we've got unemployment claims. Awesome, right? A bank holiday, and we get big market moving news. So this could create volatility on Sunday night when the market reopens. But wait, it's Easter. Yeah, but the futures market reopens at 6 o'clock on Sunday, 6 o'clock Eastern. So this volatility could come in from these numbers on Sunday. Just be aware, all right? These are the things you need to be aware of if you're planning a trade to hold over the weekend. Now, next week, we come in on Monday. We've got some wholesale inventories, not a whole lot of big news. We got an FOMC member speaking. Then on Wednesday, CPI. Thursday, PPI. These have been big market mover numbers. So next week, fireworks. All right. Be aware, be prepared. I'll be able to tell you better as we get into Tuesday what I think might happen. Right now, we're just kind of still stuck in the middle. Like I said, we're still in the red zone. We're at the top of the red zone. That leaves lots of room to retrace back to the bottom once again. So the key support levels right now, 4,000, 3,900. If we break out over this 4150, 4180 area right over here where these highs are, 4,300 is the upside target right now for resistance from the August high. We could go as high as this 4,500 area We could just truck right on through. That's a potential possibility. But I do get a little nervous if we turn down at 4,500 that we could go all the way down to a lower low. That's a magic kind of level on my other fib chart. So I prefer if we just bounced off of 4,300, came back, tested the daily roadmap line on the S&P 500 right here, pop up, come back, retest, and then go higher. ES is the S&P 500 futures. If you didn't know, like I was talking about ES, that's the futures. They trade over not all. I mean, that's the ones that open on Sunday night. NQ is the NASDAQ futures. They also open, all the futures open at 6 p.m. on Sunday. So these things will be moving. These are the ones to watch. If you need the tickers, NQ1 exclamation point, ES1 exclamation point, and the Russell still messing around down here in the box, underperforming both NASDAQ and ES, hanging out down here, having a little bit of green, potential for it to drop back to the close of yesterday. And we do have NASDAQ red, ES red, but Russell showing a little bit of green this morning. Now, Russell has the opportunity to catch back up, and IWM can catch back up. Russell has been overly punished by the banks. You've probably heard me like a broken record saying this day after day, but I got new people that come tune in every day. So just want everybody to be aware. Russell is underperforming. It has been outperforming since we made the bottom back here in October, and now it is underperforming as tech has tried to catch up. We got about halfway into the box and retracing. I'd like the bottom of the box to hold, but we may go retest this consolidation one more time, which don't have far to go to test that, and then we can get the bounce. So the bounce may happen next week. We may just kind of sit here and go sideways. So I'm biased for the day a little bit early here. We usually do it at the end, but bias for the day is kind of like sideways to down. We could get a bounce, but I'm just not feeling it today before a 3-day weekend. All right. Dollar getting a little bit of bounce off of that dip yesterday. Leading, corresponding to the market, getting a pullback. The dollar getting a little bit of rally. May retest that zone where it consolidated one more time. It had that low, four lows right there. Retest that, and then push lower. All right. For actual stuff getting talked about and moving, look at this horrible chart. That I believe this showed up a few weeks ago, and I warned about it being a crazy squeeze, and we probably go right back down. We went right back down. Getting a little bit of pop today, it looks like, but that's not anything I want to mess with. That was just a dangerous pop and right back down. AI showing up as a little bit of pop. I was saying it was going to come down to the roadmap line. That's still the path. That could be close enough since we had 1, 2, 3 bottoms right there. I have 4 if you count that one over there. 1, 2, 3, 4. That could be where the buyers are, and we could go running up again, make a higher high. We've made a higher high here, lower high here, higher high here. That can set it up to go higher once again. Pull the fib up here. A bigger move, bigger potential on the upside. 38 would be the next extension, possibly up to 43, and that's where it gapped down, I believe. If we pull this out, no, just where it consolidated. Had a nice big long consolidation right there in that zone around 50. We could go back up and test that zone. Now, they lose money, lose a lot of money. So let's be careful. That's a garbage company, and if money conditions get tighter, it's going to make it harder for them to stay in business. FSR continuing its drop towards zero. Dangerous, even though it's getting a little pop, making them morning movers. Marching towards zero. Luckin Coffee, this one, China garbage. I got stuck in this when they did their whole expose problem thing. You can't believe these numbers. Honestly, they probably lose money based on what I'm seeing. China's not held to the same standards as the rest of the U.S. This one make a mover, and you could play the chart, but I'm keeping away from this. It had a nice long pause where it got delisted and I got stuck in it. And then I got to get back out. But it was tough. Anyway, China stuff is dangerous. I can't say that enough. Costco, all the way down to the end of the wedge. Got a little excited to the downside and then came back in. Maybe it extends the wedge out just a bit, such as this. A little bit of more room to squiggle, but eventually we're going to run out of this and we're going to break out. Or maybe just keep going sideways and Costco doesn't move ever again. I mean, possible, but getting a little bit hit today. I've been giving favor to breaking down over breaking out. If we break down, that zone's down here. Probably need to turn on the log scale so they're balanced. Down here around 330. And if we break out to the upside, possibly up to 750. So keep that one in mind too. That it's not the greatest play right now. I don't like stuff that's doing this. Once it starts moving and we get something we can trade, that's when you watch it. Right now, stay away from Costco, despite being on the morning movers. And Levi getting hit, looks like on earnings. Yeah, it looks like the market just opened up. Cool. Thanks for messaging me, everybody. All right. Oh, did it open? Almost open. Pre-market still for one more minute. All right. Hey, Arthur. Working on down. STZ, Constellation Brands, getting a small little pop. Still below the roadmap line. Still dangerous. ARCB. There was not much moving, so I had to scrape the barrel. Honestly. Now, looks like we're getting there. Pre-market, ALC, and there's the open. A little bit of pop, not much move. Just not seeing much opportunity here. SAP probably going to rally on up to this 138. Just trucking. That's where it consolidated. Probably find some resistance up there. Probably not a big mover today. I'm doubting any of this is going to move big today. NVS right up into the zone. Kind of what I said a couple days ago. Popped up. If it can get above 100, that can get extensions. SNY. Looks like extending up. Getting into those prior highs right there. That's the caution zone for reversal. I would definitely be careful on that one. It made some big gaps on the way up. It can do a big retrace that doesn't make sense. TSLQ, a bearish Tesla, getting a little bit of pop this morning. It means Tesla is a little bit bearish. Hey, I mean, Tesla can come all the way down here. This was a lower high than we had right here. It can come all the way down to 145. Be careful, know your parameters. Shell, potentially on a breakout. Remove some of the old lines. Yeah, that continuation higher, 65 and 68 on the upside there for Shell. LTE looks like it's going in the toilet. May retrace back up, but that's a lower low. Lowest low on this chart for a long time. It can continue lower. How much lower? Put some fibs on here. And bouncing at 40, 45 is support, and then 40 below that. So LITE. LW, getting a little bit of pop. Potentially going higher. Watch for resistance here at 106. A retrace becomes highly likely at that point. You can see it had trouble getting through the 1272 and then popped right up to the 106. Now there's opportunity to roll back over. Of course, 111 could be the next fib line up if it keeps climbing the fibs. All right, SCLX. Gapping down a little bit. Just not a whole lot there. That's a big sideways. All right, that's kind of the list for today. Like I said, I had to scrape the bottom of the barrel to pull stuff up. Tomorrow we got a crypto special on the Morning Monster. Make sure you're subscribed, hit the bell so you get the notification when I go live. Probably around 9:15 or so is the plan. And I'll see you tomorrow. Thanks for watching, everybody. We'll continue the conversation in Discord. Remember, my bias today, kind of slightly down to, sideways to down. Maybe retracing back to the bottom, back to this breakout box on ES. So, all right, be careful out there. Don't get overly bearish. Don't get overly bullish. It's the day before a holiday. So be careful out there. The account you save may be your own. I'll see you.